Welcome to Sophie Daddy's channel. Today, we're going to crack open the black box of quantitative hedge funds. We're going deep inside the systematic engine they use to turn raw information into financial returns, basically revealing the blueprint for their alpha factory.
I mean, that really is the billion-dollar question, isn't it? And for a quant fund, the answer isn't some gut feeling or a hot tip. No way. It's a scientific, multi-stage workflow, one that's meticulously designed to find a clear, tradable signal in what is just an overwhelming sea of noise. All right, so here's our game plan. We're going to walk through the four main pillars of their whole process. First, how they find that initial alpha, then how they build it into a real strategy, how they stress test it against the real world, and finally, how they deal with the perpetual race to just stay ahead of everyone else. Okay, everything starts right here with what they call alpha discovery. This is really the art and science of taking raw, everyday information and somehow transforming it into a predictive signal. It's the secret sauce, the ingredient that gives a fund its competitive edge. So, alpha. This is the prize. This is what everyone is hunting for. It is the hard, measurable proof that your strategy is doing more than just riding the market's waves. It's evidence of a genuine, repeatable skill, not just luck. You know, for decades, everybody was looking at the exact same traditional data. Stock prices, company earnings reports, you know the drill. But that well has been heavily, heavily fished. The real edge today, it comes from the alternative data revolution, looking at information that nobody else even thinks to connect to the market. And this is where things get really, really interesting. I mean, look at the slide. We're literally talking about funds analyzing satellite photos to count cars in Walmart parking lots, or tracking anonymized phone data to see if that new Popeye's chicken sandwich is actually a hit. They're getting this ground-level, real-time view of the economy. So you've got all this crazy data. How in the world do you make sense of it? Well, quants use this entire arsenal of machine learning models. They'll start with simple linear models to get a baseline, but quickly move to complex deep learning networks. It's all in the service of one goal: finding predictive patterns that the human eye, and definitely simpler models, would almost certainly miss. But here's the catch. A raw signal, no matter how clever it is pretty much useless on its own. It has to be carefully, painstakingly engineered into a risk-managed, investable portfolio that can, actually make money in the real world. Now, this is a core concept you have to understand: market neutrality. The goal here isn't to bet on whether the S&P 500 goes up or down. Nope. The goal is to build a portfolio that is completely indifferent to the market's direction. You want to isolate that alpha, so the strategy's success depends only on its stock-picking skill. And the basic mechanics of how they do this are actually pretty brilliant. It's this beautifully disciplined process. The machine learning model just scores every single stock. Then, you simply buy the ones it predicts will outperform, the winners, and you sell short the ones it predicts will underperform, the losers. But of course, it's not quite that simple. If it were, everyone would be doing it, right? Just having an equal dollar amount of long and short positions isn't nearly enough. Your portfolio might have all these hidden, unintended bets on things like value stocks or momentum stocks. A huge part of the job is sniffing out and neutralizing all those hidden risks. Okay, so you've got a signal, you've built a portfolio, but before a single real dollar is put on the line, every single strategy has to go through this brutal gauntlet of historical simulation. This is backtesting. It's the ultimate stress test to see if an idea could have actually survived out in the wild. I love this quote because it just hits the nail on the head. A backtest can't be some idealized fantasy. It has to be brutally, painfully realistic, accounting for every single real-world friction like commissions, fees, and the cost of actually getting a trade done. If it doesn't, it's basically fiction. And trust me, this process is an absolute minefield of cognitive traps. Biases, like survivorship bias, that's where you forget to include all the companies that went bankrupt in your test can make a totally mediocre strategy look like a work of genius on paper. Getting this wrong can lead to, and has led to, catastrophic real-world losses. So let's say a strategy gets the green light. Now, automated algorithms take over the actual trading. They don't just hit a giant buy button. They use these really sophisticated strategies like VWAP to break huge orders into tiny little pieces, executing them strategically throughout the day to minimize their footprint and hide their intentions from the rest of the market. But here's the real kicker in all of this: the work is never, ever done. Because in the world of finance, every single edge has an expiration date. And this leads to the ultimate, defining challenge of being a quant: the perpetual race against decay. As soon as a profitable strategy is discovered, you can bet other people are trying to figure it out and copy it. And as they do, the strategy gets crowded and the edge begins to fade. That is alpha decay. It means a fund's real sustainable advantage isn't one single secret formula. It's the alpha factory itself, that industrial process for constantly discovering new alpha. So how do you win a race that has no finish line? Well, you win by relentlessly pushing the frontiers of data and technology. The goal is to invent the next generation of alpha signals, ones that are more complex, more unique, and way less crowded than anything that came before. And when we look out at the horizon, we see some truly mind-bending new tools. We're seeing systems like Alpha Agent that use teams of AI agents to act like human researchers, autonomously trying to discover new strategies. And then there's quantum computing, which, as shown in early experiments by HSBC and IBM, holds the potential to solve massively complex problems that are just impossible for today's computers. And this kind of leaves us with a fascinating final thought. As the machines get smarter and smarter at finding alpha, maybe the ultimate edge is shifting. Maybe it's less about finding a single brilliant strategy and more about having the vision and the creativity to engineer the system that will discover all the strategies of tomorrow.
All right, the learning doesn't have to stop here. If you want to explore even more, I've built the perfect place for you at sophie-ai-finance.com to unlock a new way of learning. Think of it as your personal learning toolkit. If you just want the big picture, you can watch the video or listen to the podcast. It's perfect for getting the main concepts down while you're on the go. But if sometimes you need to hit the pause button and really let an idea sink in, you can visit the blog article. It has all the details, charts, and text from our discussion so you can review everything at your own pace. And for those of you who want to see all the math, data, and the complete nitty-gritty behind the analysis, well, I've got a full research paper waiting for you, so you can really dig into the details and see how everything works under the hood. It's all there, all for you. And hey, if you have any ideas for new topics about finance and AI you'd like me to cover, please leave me a message. Thanks for tuning in, and I'll see you in the next video.